Again, my name is Michael Grandy. I'm a professor at Providence College, teaching an MBA class, MBA 603, and specifically looking at some problems here. We're looking at the problems from Chapter 3, Job Order Costing, and specifically we're looking at Exercise 3-10. This is Exercise 3-10. And it's going to involve a lot of journal entries, working with job order costing. So let's read it and walk through it. Dillon Products manufactures various machine parts to customer specifications. The company uses a job order costing system and applies overhead cost to jobs on the basis of machine hours. At the beginning of the year, the company used a cost formula to estimate that it would incur $4,800,000 in manufacturing overhead costs at an activity level of 240,000 machine hours. So when I first see that, I say, let's first calculate the predetermined overhead rate, because they give it to us right there, which is going to be what? $4,800,000. $4,800,000 divided by 240,000 hours. 240,000 machine hours. So our predetermined overhead rate, PDOR, equals $20 per machine hour. That's important later on in the problem when we go to apply manufacturing overhead. So let's remember that. The predetermined overhead rate is $20 per machine hour. They give it to us at the beginning of the problem. I say calculate it right away. In addition, the company spent the entire month of January working on a large order for 16,000 custom-made machine parts. So there's the number of units right there. You can calculate unit cost. They're going to calculate total cost and divide it by the number of units. The company had no work in process at the beginning of January. Cost data related to January follow. So we have a whole series of transactions that we need to record journal entries for. So the first one is A, and I'm going to abbreviate. It says raw materials purchased on account, $325,000. So we're going to debit raw materials inventory for $325,000, credit accounts payable for $325,000. Goes on to say, item B, raw materials used in production, $290. 80% direct, 20% indirect. So you got to know where those go. Direct materials go to work in process. Indirect materials go to manufacturing overhead. So journal entry B, we're going to debit work in process for the 80% number, 232. Debit manufacturing overhead for the 20% of 58,000. And this comes out of raw materials for $290,000. Item C, labor costs incurred in the factory, $180. 1/3 direct, 2/3 indirect. Again, knowing where direct materials go, work in process. Where direct labor goes to work in process. Indirect labor goes to manufacturing overhead. So we're going to have work in process here of 60,000. We're going to have manufacturing overhead for 120. And we're going to have wages payable for $180,000. So those are our first three entries. Let's look at item D. And item D says depreciation recorded on factory equipment. Factory equipment. Because it's the factory, it makes it manufacturing overhead. For how much? $75,000. So it's a debit to manufacturing overhead for $75,000. Credit to accumulated depreciation, $75,000. Item E, other manufacturing overhead costs incurred, on account 62,000. Other factory costs. Again, a component of manufacturing overhead. $62,000. Credit accounts payable. $62,000. Item F. Manufacturing overhead cost was applied to production on the basis of 15,000 machine hours actually worked. So let's remember, and we talked about this before, manufacturing overhead applied equals the predetermined overhead rate times actual activity. And from the beginning of the problem, we knew that the predetermined overhead rate was $20 per machine hour. And they just told us that the actual activity was 15,000 machine hours. Therefore, manufacturing overhead, $300,000. Item G. The completed job for 16,000 custom-made machine parts was moved into the finished goods warehouse on January 31st to await delivery. So it was completed. So that means it moves to the next stage. But the question is, how much cost do we move? The completed job. So we need to keep track of the cost of that job. So what we know is we've got two T accounts here. We have manufacturing overhead, and we have work in process. Let's remember what goes in these accounts. For manufacturing overhead, it's the actual cost, and the credits represent applied to work in process. On work in process, it's indirect materials, indirect labor, and other factory costs that go into that account. So let's take a look at them. We're going to drop the zeros here to make it simple. We're going to post all of the entries we just had. So in the manufacturing overhead, we had a debit for $58,000, which represented indirect materials. Had a debit for 120. I'm sorry, this is wrong over here. This is direct materials, direct labor, and manufacturing overhead applied. My apologies. Going back to manufacturing overhead. The actual costs represent indirect materials, indirect labor. We've got $75,000 of depreciation on factory equipment. We've got $62,000 of other factory costs. And we had this credit here for $300 for manufacturing overhead applied. We also have the work in process account where we had direct materials of $232, direct labor of $60, $300,000 of manufacturing overhead for a total of $592,000. So the job cost for this job was $592,000. And they asked us to do what? Transfer it to finished goods because it was completed. This job is what? Completed. We need to move it to finished goods. So we're going to debit finished goods inventory for $592, and we're going to credit what? Work in process, $592. We're going to zero out the work in process account. So they then go on to the last item here, and it says number 4. Now it says calculate product cost, right? It says 4. If 10,000 of the custom-made machine parts are shipped to the customer in February, how much of this job's cost will be included in the cost of goods sold for February? So what we learned is that we can only expense that which we sold. So they have the total job cost was $592,000. That included direct materials, direct labor, and manufacturing overhead. And at the very beginning of the problem, they specifically told you that this was an order for 16,000 units. So we're going to divide it by 16,000 units. Cost per unit equals $37. So they say, what portion is included in the cost of goods sold, right? So they sold 10,000 units times $37, $370,000 is in cost of goods sold. So there you go. Now, one of the things that you could look at, this problem doesn't ask you, is you could look at the manufacturing overhead account to determine whether it was under-applied or over-applied. They didn't ask you to do it, but we've covered that material before, so thank you.